Hello and welcome to another update video about Ethereum. Ethereum broke out of this ascending wedge that we talked about earlier today in the previous video. So it seems to be following the primary count, Elliott Wave count, which suggests direct escalation to the upside. So for now, we are consolidating above that level. We are consolidating above the 1940 level, 1930, 1940, which is the 5th of April high, which is quite bullish consolidation. So it broke above it. This is a suggested micro level count. This wave 3 was a bit too short to be reliable, but then again, it's a very small wave degree, so it's acceptable. So based on this count, we obviously moved up in a wave 1 of the 9th of April low. We came up, we moved down in a WXY structure. Then we are now rallying in a possible third wave. Within the third wave, we've got the wave 1 done, the wave 2 done, and the possible third wave done as well. What I want to do in this video is to highlight the support levels, the upside targets, and the level below which Ethereum ideally doesn't drop anymore to give us further likely upside. We have here the situation that we can measure the length of the third wave, and I'd rather play it safe, start from a little lower. And if we now go to the top of that third wave, which was made today at around $2,010, by the way, that target I highlighted, the 2020 level, was nearly reached, and I think we can still get there. Bear in mind, target doesn't mean it needs to stop there. It can always escalate higher. But if we look at the wave 4 pullback here, ideally it doesn't drop below 1953. So 1953 for me is a critical level that it ideally is holding to give us that fifth wave of the third wave. Because any drop below that level would make a fourth wave pullback very unreliable. Now I'm going with this at the moment. I would rather say 1953 is fine, but we've got critical support down here at 1930. This wave 1 high, because you want to avoid an overlap between wave 4 and 1. This would be it would be invalidation basically of this wave structure. So really a break below 1953, even though that would make upside less likely in this pattern, it wouldn't invalidate it. It would only be invalidated below 1930. If we break into that wave 1 price region. So just be aware of that. But generally, I mean, we're consolidating here. This looks a bit like a bull flag or bullish pennant, which is evolving here, and we can just focus on higher. Upside targets for the fifth wave. We can do that as well. The small fifth wave. All the other comments from my previous video today still stand. Nothing has changed. What I would like to do is to calculate now the fifth wave target for you. Bear in mind, this fourth wave can come down a little bit lower. I can really only measure it from the latest low, and it might come down a little lower into this orange box. It can use the entire orange box in this scenario. But upside targets measured from the current low are 2087 now. So 2020 was the previous target, which we haven't reached yet. Ideally for the third wave, we reached 2020. But we can still get there, right? But overall for that fifth wave then, we talk about 2087. Maybe even a little higher. Okay, so there are different ways also here to measure it. This was the way where we take the length of waves 1 through 3. We can also take the length of just wave 1. And then we go to the low of the fourth, and we're looking for the so-called 1-to-1 ratio. That would take us to 2068. So there are different legitimate ways of calculating upside targets. Best way to do it, in my opinion, is just to use these pivots, these support areas, to know when this pattern might actually break down. And I think I did highlight these areas for you in this video now, highlighted to you the upside targets. And just want to stress again that here at the moment, upside expectations are still my way to go. I think it has so far been correct and the correct choice to remain bullish about the crypto market. I've watched a couple of videos earlier today of other people who just try to remain bearish all the time. And we've doubled in price since November basically, right? And you can still be bearish, but you're missing out on all this stuff. So we have to go with what we see. There's no point analyzing whatever, wallet addresses, other stuff, which is just sort of speculation, really, right? I mean, we can really only, we need to stay objective here. Look at reward to risk. That's the only thing that matters. Reward to risk and probabilities and market structure. You know, market structure is the best leading indicator, and it's guided us really well in the last few weeks and months. Really well, yeah. It was the correct decision back in end of December when we started to see those first impulses across the market to flip bullish, at least for now, okay? Things can always change. You know, it's not like, okay, we're bullish now, and when we then come down to whatever, $1,200, we're still bullish. No. We have to change. Elliott Wave, when applied correctly, gives you always these key support areas, yeah, and invalidation points and pivot points. Always try to keep them up to date as good as possible. They are the areas, when they are broken, we switch into different scenarios. That's when we change our view. Not because we're biased, but because Elliott Wave tells us, because the market tells us we need to do it. It's just that we need to understand the language of the market, and Elliott Wave allows us to. There is no way you can lose a lot of money when you apply Elliott Wave and trade by Elliott Wave correctly. You can't, right? Because these levels always give you the invalidation points. So when applied correctly, there's no way you can lose a lot of money with Elliott Wave. It would only be a human error, right? Because you have such good invalidation points. You know where to set the stop loss based on the invalidation points. Of course, if you don't do it, yeah, you can lose a lot. But that's human error. But for now, we just focus on the trend. We go with the trend. Yeah, the trend is your friend until the end, as they say, and it is. You know, that doesn't mean we couldn't change our view, but for now, we remain of the view that further upside is anticipated. I can just have to highlight it again and again. At some point, these patterns will break. I mean, I'm really surprised they did hold all these support areas. I did hide a lot of them now because they just overwhelmed the chart. But all of these, most of these support areas we had on the ETH chart and many other charts, they did hold so well in recent weeks and months. At some point, one will break. Just be prepared for that. It's a bit like a trend line. At some point, it will break. And then we're flipping into a different scenario. We need to quickly adjust our view and strategy, and we carry on. But yeah, at the moment, no change necessary. It's going according to plan for now. And expectations are, as long as we're holding above 19, let's say 1930, the focus is on higher. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.